If you've been hearing rumors about a new $250 rule that's supposed to give Social Security recipients an extra boost in 2026, you need to hear the complete truth right now, because there's a tremendous amount of confusion and misinformation spreading across social media and through community conversations that could lead you to make incorrect assumptions about your benefits. If you have new to my channel, please subscribe for more updates. Let me start by addressing what people are calling the $250 rule and where this terminology is coming from, because understanding the source of this information is crucial to understanding what it actually means for you. The $250 figure that's being discussed in relation to Social Security benefits in 2026 is not a new stimulus payment. It's not a special bonus check being sent to all recipients, and it's not a one-time relief payment from the government. Instead, what people are referring to when they talk about the $250 rule is actually related to several different aspects of Social Security administration, and the confusion arises because this number appears in multiple contexts within the Social Security system, each meaning something completely different. Some people are talking about the substantial gainful activity amount for blind individuals receiving disability benefits. Others are referencing changes to the earnings test for people receiving benefits before full retirement age, and still others are discussing the minimum benefit calculations or the special minimum primary insurance amount that applies to long-term low-wage workers. The most significant interpretation of this $250 discussion relates to how Social Security calculates benefits for people who continue working while receiving retirement benefits before they reach full retirement age. Under current Social Security rules, if you claim your retirement benefits early, meaning before your full retirement age, which is somewhere between 66 and 67 depending on your birth year, and you continue to work and earn income, there's a limit to how much you can earn before Social Security starts withholding some of your benefits. For 2026, this earnings limit is projected to be around $23,000 per year for people who will not reach full retirement age during the year. Here's where the $250 calculation comes into play. For every $2 you earn above that annual limit, Social Security withholds $1 of your benefits. This means if you earn $25,000 while the limit is $23,000, you've earned $2,000 over the limit, and Social Security will withhold $1,000 from your annual benefits, which breaks down to about $83 per month. If you have new to my channel, please subscribe for more updates. Now, there's a different earnings limit that applies in the year you reach full retirement age, and this limit is significantly higher, projected to be around $62,000 for 2026. In this case, for every $3 you earn above this higher limit, Social Security withholds $1 of benefits, but only for the months before you actually reach full retirement age. Once you hit your full retirement age, which is the exact month and year determined by your birth date, the earnings test disappears completely, and you can earn unlimited income without any withholding of your Social Security benefits. This is important because many people don't realize that money withheld due to the earnings test isn't actually lost forever. When you reach full retirement age, Social Security recalculates your benefit amount to give you credit for the months when benefits were withheld, which results in a higher monthly payment going forward. It's essentially a delayed payment rather than a permanent reduction, though the way it's structured can cause significant cash flow problems for people who are counting on their full benefit amount each month and don't realize earnings will trigger withholding. If you have new to my channel, please subscribe for more updates. The $250 figure some people are discussing also relates to what's called the special minimum primary insurance amount, which is a provision in Social Security law designed to ensure that people who worked for many years at low wages receive a minimum benefit amount that's higher than what their earnings record alone would calculate. To qualify for this special minimum benefit, you need to have at least 11 years of coverage, meaning years where you earned at least a certain minimum amount and paid Social Security taxes on those earnings. The special minimum benefit increases with each additional year of coverage up to 30 years. For someone with 30 years of coverage qualifying for the special minimum in 2026, the monthly benefit amount would be approximately $950, which is significantly higher than what some low-wage workers would receive under the standard benefit calculation. However, very few people actually receive benefits under this special minimum calculation because the qualifying earnings amounts and the benefit levels haven't kept pace with wage growth over the decades, meaning most workers end up with higher benefits under the standard calculation even if they had relatively low earnings. Some of the confusion about a $250 boost is also stemming from discussions about the annual cost of living adjustment that Social Security recipients receive each year. For 2025, Social Security recipients received a cost of living adjustment of 2.5%, which increased monthly benefits by varying amounts depending on each person's individual benefit level. For someone receiving a monthly benefit of $1,000, a 2.5% increase means an extra $25 per month, which adds up to $300 over the course of a year. For someone receiving $2,000 per month, that same 2.5% adjustment means an extra $50 per month or $600 annually. The cost of living adjustment for 2026 has not been finalized yet, as this information is typically announced in October of the preceding year, but early projections based on inflation data suggest the adjustment could be somewhere in the range of 2.5 to 3%. If we assume a 3% adjustment and you're receiving a monthly benefit of approximately $833, a 3% increase would give you an extra $25 per month, which equals $300 per year. And some simplified discussions might round down to talking about roughly $250 in additional annual benefit.
Another context where the $250 amount appears is in discussions about the Supplemental Security Income Program, and specifically about income exclusions and resource limits. SSI is a needs-based program for elderly, blind, or disabled individuals with very limited income and resources. When Social Security calculates your SSI eligibility and payment amount, they don't count all of your income against the benefit. There are various exclusions, meaning types or amounts of income that don't reduce your SSI payment. For earned income specifically from working, SSI has a general income exclusion of $65 per month, and then for every dollar you earn beyond that exclusion, only 50 cents counts against your SSI benefit. This means you can always keep more money by working than you would receive by not working. Additionally, there are special rules about infrequent or irregular income, where amounts under certain thresholds in a quarter don't count against SSI, and gift income up to certain amounts doesn't count. And these various exclusion amounts and calculations can sometimes involve figures in the $250 range, depending on the specific circumstances being discussed. Let me be absolutely direct about something that's critically important for you to understand. There is no new legislation that has been passed creating a $250 payment, boost, or special benefit for Social Security recipients in 2026. Congress has not enacted any new stimulus payments for seniors. There is no executive order creating additional benefits. What exists are the standard Social Security rules and calculations that have been in place for years, with the normal annual adjustments for inflation and wage growth that happen automatically according to formulas written into the Social Security Act. Every year, certain dollar amounts in the Social Security system get adjusted. The earnings test limits go up, the maximum taxable earnings amount increases, the bend points in the benefit calculation formula change, the cost of living adjustment gets applied to existing benefits. These are routine, automatic adjustments, not new benefits or special payments. The reason this matters so much is that I've seen countless seniors make financial decisions based on expecting money that doesn't actually exist. They hear about a supposed new payment or benefit increase, they assume it's coming, they spend money in anticipation of receiving it, and then they end up in financial trouble when the expected money never arrives because it was never real in the first place. This creates genuine hardship, and it's completely avoidable if people rely on accurate information from official sources rather than rumors and speculation from social media posts and unreliable websites. The Social Security Administration has an official website where they publish all benefit amounts, all payment schedules, all rule changes, and all cost of living adjustments. This information is public and freely available. If a significant change to Social Security benefits were happening, it would be announced officially through these channels, not through random social media posts or obscure websites that most people have never heard of. If you have new to my channel, please subscribe for more updates. Now, let me walk you through what is actually happening with Social Security benefits in 2026 so you have accurate information to work with. First, the cost of living adjustment that was applied to benefits in January 2025 continues throughout 2026. That 2.5% increase is permanent, meaning your monthly benefit amount that increased in January 2025 stays at that higher level throughout 2026, unless you have some change in your personal circumstances that affects your benefit amount. Second, all of the maximum benefit amounts, the earnings test limits, the substantial gainful activity amounts used in disability determinations, and other dollar figures in the Social Security system will receive their routine annual adjustments for 2026 based on the National Average Wage Index and the Consumer Price Index, depending on which measure applies to each specific figure. These adjustments are technical and automatic, and they happen every single year without requiring any action from Congress or the President. Stay informed through reliable sources. Be skeptical of sensational claims about new payments or benefits. Protect yourself from scams by never giving out personal information to unsolicited callers or responding to suspicious emails. Use the official Social Security website and phone number to verify any questionable information you encounter. Take advantage of free counseling services through your area agency on aging if you need help understanding your options or navigating benefit programs. Know what income you can count on, budget accordingly, and seek out legitimate assistance programs when you need additional help.